Hello, everyone. According to my time, it's 1 o'clock Eastern time, 12 o'clock Central, which means it is time for the Provider Relief Funds for RHCs webinar being done by Healthcare Business Specialist and sponsored by Azalea Health and ChartSpan. Thank you guys for attending today. I looked over the attendee list there, and there's a lot of very familiar people there. We appreciate you guys coming back and being with us for this probably run 45 minutes to an hour webinar. My name is Mark Lynn. I'm a CPA from Chattanooga. You can tell from the white hair that I've been doing this for a long, long time, and most of you know me, at least run across me at least sometime in my career. So again, thank you guys for attending. There's my contact information if you want to reach out and ask questions. We'll be as helpful as we can be and try to answer everything that we can. And Danny Gilbert is a CPA who works with us, and she does a lot of stuff behind the scenes, like keeping these cost reports going. We are still doing cost reports. I talked to Kate Hill this morning about the webinar we're doing tomorrow, and she was asking me, are you guys still doing cost reports? I'm like, yeah, we're at 106. We've got finished so far this year, which is actually above the number that we had done at this time last year. That was probably because Danny was having a baby last year, but we do have got a lot of them done. So if you need to reach out to Danny, you can reach out to her as well. Speaking of cost reports, we are trying to get these things done by May the 31st. They're not due to July 31st, but go ahead and get those to us, and we will get those things done while we're sort of, I guess we're sort of cyclical in nature. The human has certain body rhythms, and I feel sort of weird if I'm not doing cost reports in May. So keep that, and I feel weird if I'm not working 7 days a week, 16 hours a day, which I have been doing. It's just not been related to as much as RHC cost reports as usual. If you've not joined our RHC Information Exchange Group, please do so. There's a lot of information, probably more information you ever want to know about RHCs is shared there by lots of wonderful people. So please join that if you haven't done so already. There's a listing of what we do to save some time here. I won't go through all of that, but we do work with exclusively rural health clinics, and we're very proud to work with you. So if you need some help with cost reports or anything like that, we're glad to help. Tomorrow, just a reminder, we are having a webinar. Quad A and the compliance team are going to help us do a virtual self-survey. You got to be careful not to say mock inspection, because CMS gets mad at our deeming authorities if we talk about mock inspection, but we're going to be doing a self-survey. We have pictures of actual RHCs, and Elsie and Kate and Monda. Those are the main people from Quad A and from the compliance team. They will sort of they'll be looking at the pictures with us and saying, oh, okay, here's what you need to be doing. COVID-19 sort of changes this as far as infection control goes, and we don't really like this now because of COVID-19. So there'll be a few things like that will be helpful. If you're becoming a new RHC, definitely you want to be listening to that, or if you're coming up for re-inspection, that is something that's going to be extremely helpful to you. There was, this is not related to our session today, but there was an update. It was in the MLN Connects on Friday, asking hospitals to do a time study, and they said they were going to accept one time study every 6 months related to this COVID-19 and pulling cost out of the cost report. Did not specifically say that RHCs had to do this, but I'm just telling you, it's a really, really, really good idea to do that. I would get working on that time study as soon as possible. And we all know Julie Quinn from HSA. She was on one of these sessions with us the other day, and she has a tracking tool that will help you do that. There's a link in there so you can get your hands on that as well. So just a quick reminder on that one is start thinking about a time study very soon, and get your 1 weekend during this period of COVID-19 so we can do that. If you're worried about the slide presentations, I sent them out this morning, and they will be on the ruralhealthclinic.com COVID-19 website as soon as this is over. I did update some information there. We had Nathan's coming on, and we added a slide for Nathan, and I added a couple slides as well. So that's where the recording of the session will be. We'll also put the recording on YouTube. It will also be on the RHC information exchange as well. Disclaimer, I may say something stupid. I may say something that's not up to date because things are changing very quickly. So it's very frustrating. I know it's frustrating for you guys. It's frustrating for us trying to keep up with that. We also are recording it. Some people have a problem with us recording it. If you have a problem with it, please, please leave now. And but if we do say something that sounds weird or is not what please ask us questions. We'll have a time for questions at the very end. And this is not a substitute for legal counsel. So before you attest, I would seek your legal counsel and make sure that you're good on that, and check the HHS and CMS websites often. Things change as much as 4 or 5 times a day. We're shooting at a moving target. So things I tell you in this session will probably not be completely true in a week from now or in 2 weeks from now. That's been happening over and over again as we've had these sessions. If you do have questions, try to hold those to the very end. I know I've learned that from some of the NARHC meetings with webinars with Nathan, was that you just end up getting so many of these questions that you just get overwhelmed. And if you'll just wait till the end of the session, we may answer your question as we go through here. And if we don't, then please ask us a question and we'll have some time to answer those. You will probably get this dumb look, and I've probably had that dumb look on my face for 30 years now, but we're not going to know all the answers to your questions because the guidance is not out there. It's not at that granular level where you guys live in. The regulation we have is typically like from a 30,000 feet level, very, very brief, not the detail that you're looking for. So if it's not in one of my slides, it probably means I don't know what the answer is, but we will definitely give it a shot, and we'll have a listing. We'll make a listing of them and then try to respond to them as we work through this. Meet our speakers. We did. Thankfully, Nathan came on, and he is going to speak to you guys for a few minutes. So Nathan, if you will open up your mic, make sure Danny, make sure that Nathan has an open line there. And Nathan is the Director of Government Affairs for the National Association of Rural Health Clinics. You've seen him many times at the NARHC meetings. You've seen him on the webinars that the NARHC does, the technical assistance. So, and Nathan has been a fantastic friend to RHCs, working tirelessly. He's another one that's putting in these 16, 17 hours a day, 7 days a week here recently. So there's a lot going on. There's the Improving Telehealth for Underserved Communities Act. So Nathan is going to spend a little time. Nathan, take as much time as you need to go over whatever you want to, and then if you have time, hang on as I go through these slides, and keep your line open for us. And if I say something stupid or not right, you feel free to correct me. So Nathan, I'm going to hand it over to you.
Thank you, Mark. And I think you're giving me way too much credit on some of this stuff. I'm just working, but I'm not doing anything extraordinary out of the ordinary. I'm just trying to do my job. So giving me, I think, a little too much credit there, Mark, but I appreciate it nonetheless. This was a bit of a late-minute ad, so I apologize for this not being in a slide here, but I just wanted to pitch folks, before we get into the provider relief funds, I wanted to pitch folks one last time to reach out to or not one last time, but another time to reach out to your members of Congress on this legislation that was just introduced last week. The legislation is called the Improving Telehealth for Underserved Communities Act of 2020. And what we have shared here is a fact sheet, which you can, I'm sure Mark is sharing these slides, but you can also download this fact sheet from narhc.org website. So, or reach out to me and I can get it to you. But what this would do is it would, I think, and I hope everyone agrees with me, dramatically improve the way telehealth works in rural health clinics. We all know the history of us not being able to do it until the CARES Act. And then we had to wait 3 weeks. Mark made some excellent memes about waiting for the guidance to come out for 3 weeks. And then when they finally did come out with the guidance, the payment is $92.03, no matter what you're doing, no matter what your all-inclusive rate is, etc. And we have to carve out the costs, or we have to allocate the costs properly. There's a lot of claims reporting issues, and certainly for our provider-based RHCs that get paid their all-inclusive rate of more than $92, you're going to owe money back in July. So there's many, many things that are problematic with the way that the telehealth benefit was set up. And this, while everything is fresh, this is our opportunity to still change telehealth. Medicare is still, moving at light speed, but eventually the policy changes are going to slow down. And what I'm afraid of, and what we're hoping to prevent, is that as COVID-19 unwinds, maybe in a year or so, they're going to make telehealth changes permanent. And I do not want the current policy to be the permanent policy, the de facto policy that just gets permanently etched in there forever. So this legislation is very narrowly designed to just fix this one issue for RHCs and FQHCs. So it has a lot going for it. It's not just rural. We also have urban members that are interested because it covers FQHCs as well, and they're in the same boat. And it helps everyone, including our independent RHCs, who, of course, actually get a $6 or $5.50 bump up on the telehealth visit because the cap is so low. So this also raises the cap to $92.03. Which will make those independent RHCs whole by moving back to getting paid on the all-inclusive rate for a telehealth visit. So just wanted to pitch everyone on this real quick. We need folks to reach out to their members of Congress. Today I got an email from Senator Hyde-Smith from Mississippi saying, hey, I got a ton of people reaching out to me today about this. What is this? That's exactly the kind of thing that I want to see more of. They reached out to me because so many of their constituents had reached out to their office. That's exactly the kind of thing that we need, and I will get them set up on the policy side, but I need folks to reach out if you think that this is a good idea and you want to improve telehealth. This is the legislation to do it. So with that said, I know Mark's got a lot of really important information on provider relief funds, so I'll turn it back over to Mark. I'll be on until about 2 o'clock. Just in case you want to ask for my expertise, but I think you have most everything covered, Mark, pretty well.
Okay. All right. Well, Nathan, thank you very much. And that's extremely important that you do reach out to your congressman that now they're moving forward. I know the House approved the I guess what they call phase 4 the other day, $3 trillion sort of wish lists. That's going to be, they're going to be working on it for the next probably month, the way they're talking. So we don't have a whole lot of time, but we have a little bit of time to reach out and get this a permanent change, because Nathan's absolutely right. The way that they do it right now, telehealth, there was an article a couple of weeks ago, the genie is out of the bottle. Absolutely. Everybody loves telehealth. Your patients love it. Your doctors, your providers are beginning to love it. And we don't want to go back to the way it was. So COVID-19, is sort of giving us a catalyst or a spark to make these changes that were really happening anyway. They were just moving slowly. They were evolving slowly, but now the telehealth craze is really moving quickly, and we don't want to be crippled in a sort of a 1977 system, which is what they proposed here. So Nathan, thank you very much. And like I said, if I start going astray, you just keep me going. Yeah, go ahead.
Sorry, Mark. Just one last thing I forgot to mention. If folks need help and are serious about advocating, which I hope you are, please reach out to Mark or myself, and I can get you the email addresses of your members of Congress and their health LAs. So I'll give you the exact right person to email and to reach out to. So just reach out and I can get you those contacts.
Okay, perfect. Thank you, Nathan. let's go ahead and get started here because I don't do what we normally do, which is spend a lot more time in these things. I think we had that one marathon. Kate was still talking to me about it. It's like, Mark, you're not going to keep us here 3 hours tomorrow. Are you like you did that one webinar? I'm like, no, we're going to try to avoid that. So let's go into the provider relief funds for RHCs. And I'm not the only one that says stupid things. You know, here, this was Seema Verma on 4/7/20 said this week they're going to give you guys $30 billion, no strings attached. You can do with it you can spend it any way you see fit. We all know that was really not really the case of the way things work. So you know, they always say when you start a webinar or a speech, you want to start off with a funny story. To me, that is a funny story to think that the government is going to give you $30 billion and there's going to be no strings attached. When we very quickly found out that wasn't necessarily the case. You also get to learn a little bit of French in here, which my French is not very good. I had to tranche. I had no idea what tranche meant, but it's a French word that means a portion of something. And if quarantine lasted very much longer, all the cake that we've been eating, yes, that's definitely something. So next time you go to the dinner table, get you a tranche of cake. And so what that means is basically they've divided up these funds into different tranches, and they've released them at different times or for different purposes. So that's when you see that word, that's what we're talking about. And today we'll quickly go over, and again, we can't get into the granular level. Number one, so we don't know a lot of granular level. And number two is because we don't have the time to do this, but we'll quickly just mention a few things. The PPS loan grants, that's forgot to turn this thing down. That is the payroll protection program. If you haven't already got that funded, most of you have it funded. There's still a few $1 billion. There's like $100 billion left in that fund, which is surprising to me. The first piece of that fund, the first tranche of that fund went out like toilet paper. It was gone before you knew it. And this tranche is still out there. It's probably $100 billion left the last time I heard. Also, HHS is making something called the general distribution. There's two. It started off with a $30 billion distribution that came out on April the 10th, I believe it was. Fridays are good days. Let me tell you, not only because it's the end of the work week, but you get a big check in your EFT. It just seems like about every Friday. So always look on Fridays. Look at your EFTs and your bank account and see if you've got an EFT in there, because you've got some pretty good ones in the last month or so. And so there was one initial distribution of the $30 billion. And then this last Friday, you should have received your second distribution. They kept telling you were going to get it within 10 days. Within 10 days, it was going to be April of something. You were going to get that second distribution. Well, everybody I've known, no one had gotten one until Friday. Was my understanding of that. So look for that money. If you haven't, I had some people this morning that didn't know they even had it. They went back and looked it up and said, oh yeah, it's in there. So that's one thing. The one thing that was exciting for rural health clinics was this rural distribution of $10 billion. That was the piece where every rural health clinic that's independent RHC received $103,253.23 at least, and up to 3.7% of your operating expenses. So that was a big check. And then there's something called the RHC distribution. That's a special fund that's $225 million. Nathan, can you update us on that? Because I keep hearing it's going to be out any day, sort of like that second distribution of the HHS General Distribution Fund, but I haven't seen anything on it lately. So do you have us an update for that?
No update other than it will be related to testing. So I think there might be more strings on that money in terms of you have to use it for testing, COVID testing. But no details. Hopefully this week, but no promises.
Okay, perfect. Okay, yeah, that sort of ties in. I was listening to a webinar right before I got on here from the Kentucky Primary Care Association, and the FQHCs received a distribution, and it was for COVID testing, and I think HHS was a little bit getting upset because they weren't seeing a lot of the FQHCs doing the COVID testing like they should. At least that's what was being said at the webinar. So keep that in mind, people. If this money distribution comes out, start thinking about the way to do COVID testing for your patients, because we need that to open up the economy as quickly as possible. And that, Nathan, what you said sort of ties in exactly to what was being said in the webinar I just got off of before I got on here. And then they've also opened up this COVID-19 uninsured portal. So there's a $1 billion in that. I don't really know a whole lot about that. I would just click into the link there. And if you have somebody that's uninsured, I believe they're supposed to pay you sort of at your Medicare reimbursement rate. It's probably Medicare Part B fee for service rate, but that is a portal where you can get some funds related to your uninsured COVID-19 patients, is my understanding of it. We won't talk a lot about that. Here's the payroll protection FAQs. This is one that just came out the other day. This is from Senator Rubio, and it's an updated one. Also, there was some updated guidance about whether a PPP loan will qualify for a tax deduction. It's not counted as taxable income, but your expenses will not count as a item that you can deduct on your tax return. A lot of your senators didn't really like, the senators and congressmen didn't really like that. And so maybe in phase 4, they're going to change that to where you can keep it as an allowable expense on your tax return, but that's not happened yet. There is a act that's out there that's trying to get through, but it's not certain yet. So that's one thing to watch for, is if that will pass or not, because that will certainly be a big benefit to you. And they've just released, you may not have seen this yet, this was just released on March the 15th or April the what day is it? May the 15th. It's the quarantine is every day is the same here. But that was just released on May the 15th, which, and not very many people had seen it yet. It's 11-page application for the PPP forgiveness. So go in there, look at that, and there's a lot of tables in there that you'll need to start pulling the information together so you can start preparing your PPP forgiveness application whenever it comes due. And then if you want to know more about this, you don't have to be in these areas. I know I'm such a wonk that I actually listened to all 6 of these last week when the National Rural Health Association had these on, and they're very good. They're about 1-hour webinars on PPP loans, and so you don't have to be in the region to sign up for these. So definitely think about doing those tomorrow. That would be great. Here's just a general summary of the information. Nathan wrote a great article in the spring in a RHC webinar newsletter. So if you click into there, you're going to get about 3 or 4 pages of detailed information. And there's the provider relief fund page there if you click into that, and I'll show you that one in a minute as well. So you really do have to watch these websites very closely. This is a website that shows you who all got paid. So if you're nosy and you want to see who got what and how much they got, all you do is click in there. There's a database that will come out and it will show you the relief checks how much they were. If you haven't received one, you can look on there and see, well, they said I got a check. Where is that check? That you can sort of track it down as well, or at least you'll know that you were supposed to get a check, but it didn't show up, and you'll have a way to start looking for that as well. Here is the table that I put together, and I think I've changed it probably 10 times since I've done it. Some of the information I had wrong, some of the information has been updated. And so there's basically, let's go through our tranches. And the first one is a $30 billion general allocation that was paid for 10. How much was it? It represented 6.2% of your Medicare revenues. They basically looked at your cost report and figured out how much your net reimbursement was from Medicare, multiplied that by 6.2%, and wrote you a check for that, no questions asked. That showed up in your bank account, and you had no idea it was coming to you. That was for lost revenues and increased expenses to COVID-19. So keep that in mind. That's what these first 2 tranches of money is for. The second tranche came on 5/15. So that was the one that you should have gotten on Friday. What happened was you were supposed to submit, there's an attestation form. There's two different attestation portals. There's one, the first $30 billion you got in tranche one, you just had to attest that you got it, and yes, we'll do what you want us to do, and you're good to go. The second one, the second tranche, you had to report to them your net revenues. You had to give them your 2018 or 2019 tax return. There was a line number on that showed your net revenue. You reported that to Medicare, and it took them about a month to sort of get, okay, 2% minus the 6.2%, 2% of net revenues minus 6.2 of Medicare revenues. Here's a check for you guys for the difference. And I tested one this weekend on one of our clients, and it worked out exactly right. So that's what you should have. So, and then we've got a slide that shows you the math on how they computed that as well. So those are your two general allocation tranches. The third tranche that we'll talk about is the rural provider allocation. This is the one where you got the $103,253 plus 3.7. That's so you got at least a six-figure check, and that was paid on May the 6th. So there was really nothing in there about how you could use the money as far as expenses go, from what I can tell. But there was the same listing of things you could not use the money for. And we have a slide for that as well. I'm assuming that it's probably going to be for the same exact thing: lost revenues and increased expenses due to COVID-19. That's what this rural provider allocation is for. That's my assumption. If I say something completely off base, Nathan, you can correct me if I'm wrong on that. So FAQs, they're up to a 19-page FAQ specifically on the general allocation. And I should have updated my slide because it says none as of 5/13. Actually, this weekend they updated the FAQ that's linked here. It's now 19 pages. There's about 2 pages specific to the rural provider allocation. So we'll show you where that document is here in a second. So go to that document and read that as well. Again, lots of updated information in FAQ. So I really probably need to add that one.
Mark,
yes, go ahead, Nathan.
Sorry, just one thing that I believe occurred, and I think you can confirm this, is that on the second tranche 2 here,
yeah,
if you were a provider-based RHC, it's likely that you got paid prior to 5/15 because the government already had your net patient revenue on the hospital cost report.
Okay.
So if you're a provider-based RHC, don't look for a payment on 5/15. It was probably before for tranche 2.
Okay, perfect.
Is that fair?
Yeah, that's fair enough. I talked to some of our provider-based friends, and they all told me they hadn't received it yet. And I listened to several webinars, and basically, as of the end of last week, everybody had said, "Well, we haven't seen it yet." So that's probably So hopefully that is the case. They got it earlier. Okay.
All right.
Thank you, Nathan. I appreciate that. Okay. All right. Let's go ahead and let's move on to the next slide here. This is what the CARES Act Provider Relief Fund looks like. This is where we get most of our information. This is where you get to see the FAQs. This information changes almost daily. They don't really do a good job of telling you what changed when. So you sort of have to read through it and make sure that nothing's changed and click on the links and follow it through, because it's not chronological in a lot of cases. They just change the information, and you can be easily in the dark. That's why it's easy for me to get lost in this. So here is the $10 billion distribution. The great thing about it was everybody got a base payment plus a percentage of your annual expenses. You also, for your pediatric clinics that had no Medicare claims, those first 2 tranches, you had to have had a Medicare Part A or Part B claims going into the system in 2019. If you didn't have that, then you were not going to get paid from tranche 1 or tranche 2. So that left off your pediatric clinics. In this rural distribution, though, that was not the case. Every rural health clinic should have received some money from this. There's a little confusion on how provider-based RHCs were included in that. So we're going to show you the slide and information about for you provider-based as well. The independents were pretty easy or freestanding. You got $103,256 plus 3.7% of your operating expenses there. And there's a nice little breakdown of how much money by state if you're interested in that. Here is and this is from the FAQ that was just the other night about the rural targeted distribution. Talks about what the cause and the RHCs and cause received. I'm easier, since I'm a CPA, I'm easier dealing with money than numbers than words. So we'll show you how that works in 1 second. And we'll just go through that and look at here. Here we go. Here's our numbers. You can see for independent RHCs, there's their 103,253 plus 3.7% add-on. For your provider base, there's no base per RHC, but you go to G3, line 4 of the CMS cost report. So if you look over here, these are the instructions for the form 255210, which is the hospital cost report. Line 4 is total operating expenses for your provider-based RHC. So let's go in here and let's give an example here. Our little small rural hospital has total operating expenses of $10 million. And how would our expenses be allocated here? So basically what CMS said was they're going to pay you $3 million as a base. And in this case, well, let's go back to our little slide presentation here because I'm going to tell you wrong. If your operating expenses were $2 million, then they're going to pay you 50% of that, and they're going to add a 2% of that. 40%, if you had for the next $2 million of operating expenses, you get 40%. The next $2 million, you get 30%. The next $2 million, you get 20%. The next $2 million, you get 10%. So if you add all that up, if you have $10 million of operating expenses, you're going to get a $3 million base check plus 2% of your operating expenses as well. So in this case, let's go, for example, here, if our hospital has $10 million of operating expenses, we're going to get our base of $3 million when we did the numbers there. We also got 20%. We got yeah, I said I was good for numbers, and now I screw them all up. 2% of that $10 million as well. So you should have received a check for $3.2 million. Well, how do you allocate that to your different entities in there? So if your acute care hospital, if your operating expenses were $5 million, if your home health agency was $2 million, skilled nursing, here is one way that you could do it. You just take 3.2%, 32%, multiply that by your total operating expenses for that particular department of the hospital. And that's one way that you could allocate those monies to your particular entity. If you wanted to, again, you guys can allocate this any way you want to. It's up to you guys. That's just one very simple way of doing it. Or if you want to allocate it based upon the freestanding allocation to the RHCs, you could use 103,253 and 3.7% of their specific operating expense. If you use that methodology here, instead of using 32% and getting and allocating 322,000, 320,000. I'm so used to using billions, so these numbers, it's hard for me to say these little small numbers like 320,000. Instead of using 320,000, you would have used $104,253 as your allocation. Again, there's no rule about how you guys allocate it. It's up to you how you guys want to do it as well. But that's just one way to do it, and that will give you an idea of how CMS came up with that $3.2 million check that you got and how to allocate it to your different areas there. So and I apologize for making that clear as mud, but and then here is that FAQ that I talked about. That's 19 pages that was just released the other day. Definitely you want to take that and read it. Believe me, it's not exciting reading, but it's out there. So what should you do once you receive your provider relief funds? I always tell people for each tranche, when I say each tranche, I would say Your general allocation monies, you'd want to put that in one bank account. Your rural allocation, put that in another, and then your PPP loans, put that in separate bank accounts so you know which distribution pool it's coming from. That is a really good idea. Also, set up separate general ledger accounts in your computer system, in your accounting system, and keep up with your additional COVID-19 expenses, especially those ones that are in excess of usual and customary expenses. And you got to be careful about your expenses here, because you don't want to double dip. You don't want to include the expenses that are being paid for in the PPP loan, which is very short period of time. You have an 8-week window to use this for payroll expenses. You don't want to be double dipping there. And so keep up with that. Keep auditable records and receipts on how you spend the money, because even though you've seen where you have to fill out a form if you get more than $150,000 each quarter. Some of you guys only received that $103,000 check, so you're thinking, oh, I don't have to keep up with these expenditures, I don't have to keep up with this. No, you're gonna have to report this money, even if you don't hit that $153,000 threshold to report quarterly. Somebody is gonna come back in and audit these numbers, so keep good records. You're gonna have to do it. No matter how little you get 1 million or you get 3.2 million, you're gonna have to have auditable records. So when I said this earlier, use your PPP money first to pay payroll during that 8-week forgiveness spending period. That's very important for you to get loan forgiveness for your PPP loan. Document your lost revenue. Most of you guys in March, from what I've seen, March was a really good month for most RHCs, but April was when the bottom dropped out. That's when you actually had lost revenues. So continue monitoring your lost revenues. This will be a marathon. What Nathan said earlier was, this may last into next year. And these funds, don't freak out that these funds is a lot more than what your lost revenue is in April. That's okay. These funds you're gonna have to use these funds to weather you through the next 6 months, next 9 months or so. By that amount of time, your lost revenue will significantly be more than what you've received. So I got a lot of people calling me up saying, Mark, we need to send this money back. We got way too much. We only had lost revenue of 22,000 in April, but we got a check for 103,000. We don't want to accept that, do we? And I'm like, no, you definitely want to accept that money. Hang on to it. The governments will be glad to take it back eventually. If you really come to the point where you can't, that you don't really have that much lost revenue, that's great. That means that COVID-19 wasn't as bad as we thought it was going to be, and things are returning to normal quickly. But so that's my little speech on that. You do need to attest within 45 days of receiving the monies. That used to be 30 days. They changed that sometime last week or the week before. But now you have 45 days to attest that you received it. And there's the PPP thing. We talked about that. So what do we do once we get the money as far as accounting goes? What you want to do is set up separate bank accounts for each one of these. In this case here, the $103,253 check. Set up a bank account called Rural Provider Relief Distribution Bank Account, and we're going to have an asset of $103,253 in your accounting records. What you want to do is set up an account. It's going to be a liability account called Deferred Rural Provider Relief Stimulus Revenue. That means you have an obligation to fulfill what's required under the Rural Provider Relief stimulus. So you have a liability to do something, either increase your expenses for COVID-19 or you've suffered lost revenue from COVID-19. So the next thing is, when you spend the monies, when you actually write a check, let's say you're past the 8-week period, you really need money for payroll. What you're going to do is you're going to pull the money out of your bank account, the Rural Provider Relief Distribution Fund, and you're going to have an expense account of payroll expense COVID-19. You may want to set up a separate department in your accounting system that says COVID-19. So COVID-19 will be a department of your general ledger of your accounting system, and all of any expenses or any checks that you rely will have that COVID-19 as a department of your general ledger. So in this case, we've taken the whole $103,253 out, and we're going to expense it to payroll expense COVID-19. And then what you're doing at that point is you're recognizing that revenue, that liability to fulfill that $103,253 of service to the rural provider relief stimulus is now over. So you're going to recognize that revenue and you're going to relieve your liability, and your liability is going to be zero. Your revenue is going to be $103,253 increase. So basic accounting there. What can you not do with it? You can't do this list of horrible things. Also, if you're executive pay, Section 202 there, especially for your physicians, your administrators, those types of people, you cannot pay over $197,300. That's the executive 2 level, 2020, that number there. So don't claim payroll pay for an individual more than $197,300 on an annual basis. So keep that in mind. Some of your doctors will definitely be above that rate, or some of if you're in a hospital, your administrators, they will be over that. And if they have any of these jobs available, just tell them to call Mark Lee and I'm available. Okay. So this rural health funding thing may not work out for me, so you never know. I'm just teasing them. But let's see here. Did both freestanding and provider-based RHCs receive funding through the rural distribution? A lot of people were confused because there wasn't any specific check for your provider-based RHCs. They did, in fact, get money for that. That was that G3 line 4 that we talked about. That's where they got that money. Remember, here's a nice little timeline for you guys. You have 45 days to attest. And then every quarter, you're going to be required to report to the government what you did with those funds, how much your lost revenue was, 10 days after the end of each quarter. Now, what a lot of people are asking me is, well, wait a minute. Well, we got from tranche 1 and tranche 2, we got $40,000. And from our rural distribution, we got $103,000. That means, we got 100. No, wait a minute. That was bad math. We got 40,000 from round 1. We got 20,000 from round 2 of our distribution. That's 60,000, and we received 103,000 from our rural distribution. In total, that's over $150,000. That means we don't have to report each quarter how our spending was. It's not true. They use if you got money from the CARES Act, then they're requiring you to do this report every quarter. So tranche 1, tranche 2, and tranche 3, add those together. If it's more than $150,000, you're going to have to do this quarterly report. If it's less than that, you don't have to do the quarterly report, but you're still going to have to account for it. The no strings attached, there's really strings attached. Okay, so I think that should be pretty easy for you to understand. What's going to be included in this quarterly report: the total amounts of funds received from HHS, how you spent the money, a detailed listing of any projects or activities, and I think what Nathan was talking about was doing COVID-19 testing. You definitely want to use that. That is one of your projects there, to try to increase your testing from that. The availability of lab tests is getting more and more. The availability of PPE is getting greater, so you want to do that. Also, you need to do the estimated number of jobs created and retained. Again, this is a lot about retaining the healthcare system and keeping people employed during this time. And then if you had to subcontract or have outside contractors, then you'll want to provide that information there. And I don't really know what the Federal Funding Accountability and Transparency Act of 2006 requires you to do. So that's probably on my to-do list to figure that out. But we'll do that. Here is a form that we came up with that you can use for the quarterly distribution. There's probably a better form out there. We'll look for it, but that's just something that it just has the items that they're asking for specifically in this, and that's a form that you can use. It is on our COVID-19 website for that. We also put together a template to keep up with your expenses as well. So let's see, put that on there. I know I put it on here somewhere. Again, no double dipping. You cannot claim your payroll protection program funds if payroll for that and payroll for this rural distribution or tranche 1, tranche 2, or tranche 3 as well. And then here, again, what to track. Here's the information that you need to track to do this. And here's some of the expenses that you can claim as well. Overtime, shift differentials. Remember, people are having to pay hazard pay because people are putting their lives on the line. This is hero fun time right here. So overtime, shift differentials that you're having to pay because of COVID-19, bonuses to attract people to work. That's perfectly fine. Incentive pay, temporary usage, agency usage. Your PPE expenses have gone up tremendously. Everybody out here is saying they got a box of gloves that used to be, $5 for a box. Now it's $50 for a box. So your PPE expenses are going up. Additional housekeeping, additional infection control. Everybody's cleaning more. Everybody's doing more. Everybody's buying more Lysol. So keep up with all those expenses so that you can get credit for that. Let's see here. There we go. There's my economic relief tracking tool that we came up with. It's an Excel spreadsheet, and you can use this to sort of map out your expenses each month. That is one tool. If you don't want to set up a general ledger accounting system to do that, that is really your best bet, is to use your accounting system to keep up with this. If you don't have the sophistication to go in and change all that, you can use this Excel spreadsheet to track it as well. If you just click in here, you will find it. You'll also find this on our COVID-19 website. You'll find it on the RHC Information Exchange as well. Here is the general distribution. This is an actual client that we have. You can see we work with very, very small RHCs. The places that I go to, they're the edge of the world, let me tell you. So in this case here, this clinic had a net revenue of $193,803, reported that to the portal, and 2% of this net revenue was $3,876. They were paid on 4/10, $1,242, which represents 6.2% on their PSNR. Looked at the PSNR, and sure enough, that's what the number was. And then yesterday, or on Friday, they received a check for $2,634, which was exactly 2% of this number minus what they received then. So that's and again, this information is included in this economic relief tracking tool as well. And then there's also a place in your tracking tool for estimated lost revenues. We haven't really heard if they're talking about net revenues or gross revenues. They're not very granular on their explanation of what you can do, what you should be using. Should it be gross revenues? Should it be net revenues? They haven't explained that. They said you can use budgeted revenues. I mean, they seem to be very loosey-goosey in the guidance right now. So we use gross revenues here, and you can see what happened to this poor old clinic here. They went from March was good. They actually had more revenue than the previous 2019, but in 2020, you can see the revenues went from 37,000 down to 14,000. So that their lost revenue to date is 17,000. As this thing expands on, this lost revenue is going to increase and increase, and it's going to be more than that $103,000 distribution by the time this is over, no doubt. So this is a marathon, not a sprint, unfortunately. Okay, rejecting payments. If you don't deserve this payment and you don't want this payment, you can reject it. There is the way that you do it. You guys can read just as good as I can read, so I will not go over those in a lot of detail, but I just want to make sure you have that information if you want to. If you received a paper check, here's the process for you to send back a paper check to them and or to mail a refund check to HHS as well. What if the money is greater than you expect? I had a phone call this morning from a doctor who was like, well, we're not gonna, we received 140,000 in this rural distribution, but we're not gonna have this much in expenses. Should I send them back the portion of it that we think that we don't need? And I told I was a little bit grumpy, but I said, no, hang on to that money. You may need it for a long time. And if eventually it comes down to the point to where you got more money than you received, there's going to be a process in the future to where you can pay that back. But what I've been telling clients is, you get this money, hang on to this money. It's a lot harder to get that money back. What the government tells you is, if you're going to reject it, you need to reject the whole thing and send it to them, is my understanding of what this says. So I've been telling people, if you get the money, put it in that account. Don't spend it. If you don't think you're going to need it, put it in your separate bank account and just let it sit there until you have to send it back. I can't believe this is not like, if you ever watched that movie National Treasure, where the National Treasure, where the FBI agent tells the guy, what's his name, Nick, whatever the guy's name is, the star of the show, like, if somebody has to go to jail, this is not somebody has to go to jail because CMS sent you a check and you really weren't sure how to use it, and you set it in a bank account so you guys could figure out the guidance on that. So I wouldn't lose a whole lot of sleep from that. Okay, so here's some of the FAQs. Here's some of the questions that people have been asking me. One of them is, if we're on the list, we should have received a check, but we haven't received it yet. And Nathan, you can probably explain this a little bit better than I can. Bill sent this to me on Friday. Yeah. I sent it out to probably more people than I should, but I was really wanting people, if you were owed this money and you thought you owed it, I was reaching out to everybody I could. So I probably messed up a little bit there.
Right.
But Nathan, if you'll go ahead and explain this, please.
Yeah. So let me chime in here. So it's on your provider relief fund summary table, you noted that in tranche 3, the qualification for tranche 3 is RHCs with a CCN as of May 1, 2020. There are RHCs, absolutely RHCs, that had CCNs before May 1, 2020 that have not received funds. Now, that could be for a variety of reasons. We're working with HHS to expand their list of RHCs as best we can to include RHCs, but no decision has been made as to this May 1st date. So we are working with them to try to get them information about who they might have missed in their initial list, and what are the various reasons why they missed X, Y, or Z RHC. And so that was that. We reached out to folks for this, but this is not at all the HHS decision on a cutoff date. It might, we don't know what that is. Does that make sense?
Yeah, that makes sense. Just because we reached out to you doesn't mean that HHS is going to actually use this May 1st date. We don't really know what they're going to use. I think what Bill and Nathan are trying to do is just get that listing as comprehensive as possible, right, so that maybe so you're saying there's a chance, we just want to have
a chance. Yeah, exactly. And we don't know what if the final decision absolutely has not been made, so we just don't want to give a false sense of hope or an expectation. We have been working to identify who might have been left out and why they might have been left out, but again, the decision has not yet been made.
Yeah, and I apologize for my wording on that email. If I don't want to give you the false hope that you're definitely going to get it if it's as of May the 1st. So I could have done the email a little better. So I apologize for that. Okay, but let's go ahead and here's the question we had this morning. If my 3 checks are more than 150,000, can I send back the amount that gets us under the 150,000 threshold, so I don't have to keep up with how I spend the money? You're going to have to keep up with how you spend the money, no matter if you're below the 150,000 or not. So, and they're not going to let you send back a portion of the check. You have to send it all back or not. And then that's me. I think I've gone through this one before about lost revenue for a longer period of time. So I think we've covered that already. How do you attest to the general distribution fund? This is in the FAQ. I just copied it for you guys. I won't go through all that. I think most of you guys have already done that. If you haven't attested already, then like I said before, is reach out to council, make sure that everybody feels comfortable with that, and then attest to this, getting this general distribution. You have 45 days from the day you received the money to do this. Is it a loan or a grant? It is a grant. You're not going to have to pay this money back unless you don't meet the terms and conditions there, which is lost revenue, increased expenses due to COVID-19. So in theory, you're not going to have to pay any of this money back. And again, we're using the FAQs for all these answers. So here, I gave us a little formula here to demonstrate how much you should have received. So first off, take your lost revenues and you add your increased expenses attributable to COVID-19, subtract out money that's being reimbursed from other sources like those PPP loans. You want to subtract that from this, and then that's how much your relief distribution payment should be. Or hopefully that relief distribution payment will not be more than that number, because that's when you're going to have issues. If your relief fund distribution payment is less than that, then you're good to go. So that's why it's important that you keep up with this information as we go along, because again, it's going to be a marathon. So you want to make sure that you're not in a position to where HHS will recoup some of these monies from you just because you kept horrible records. And we do 175 cost reports every year. Some of you guys do keep horrible records. Let me tell you, some of you guys are gonna have to do a lot better. Now, there's a lot of you guys that we do more cost reports for that do a great job, but we got some that really need a little bit of help. Is this income taxable? As of right now, it's considered not to be taxable. And the problem though is those expenses are not deductible from income as well. So that's and that same principle should apply to cost reporting, I'm thinking. Again, another reason why you want to keep up with this expenses very closely because of that. SBA loans, here we get a question about that for SBA loans. Should you be able to include FICA taxes? FICA taxes are not forgivable, so you don't want to put that in your application for forgiveness. Certain state and local taxes may be forgiven, but not the FICA taxes. So remember that your employer portion of the FICA taxes will not be forgiven. Let's see. Would you only record expenses on the PP until the 8 weeks, and then record your payroll and the next deposit when it comes from HHS? So the answer to that one was yes. To the extent that payroll expenses may be claimed and increased expense related to COVID, you may want to claim them in the period not covered by the PPP. When I answered that question, I was really funneling my office hours persona, where you answer a question but you don't really answer it, because a lot of those office hours, if you've been listening to those from 5 o'clock on Tuesday and Thursday Eastern time, a lot of the CMS officials will give you an answer that is completely not that doesn't really answer the question, sort of wonk talk. I'm gonna skip this. That's mainly about PPP. Now, can you tell me reporting HHS funds disbursement include 100,000 amount for AHS, for example, 2 distributions equal less than 100,000? Will we need to report quarterly? The answer is yes. You're going to add all those tranches. You're going to add together, and you're going to have to report that quarterly. So that was answer. Okay. If you recently terminated from the RHC program, and sadly, we had a bunch of people. This is why I'm not in Las Vegas, because I had no idea that we're going to provide this much money out there for RHCs. But we had a few folks that terminated. They did continue to receive. They did receive the $103,253 check. What should they do? Nathan, we've talked about this one before. I think right now it's just sort of hold on to the money till we figure out what to do with it, or is there updated? I know we talked about this about 2 hours ago, so there's probably not a whole lot that's changed in 2 hours.
Yeah. I mean, this is nothing other than my pure logic tells me that you probably shouldn't spend it until you have an official policy.
Yeah.
Just in case you do have to owe it back. That's just logic, though.
Yep. That's sort of what I would do. Just put it in the bank, hang on to it, and you'll probably have to send it back. But that's what we do for now. Okay, questions. Let's see. How do we do on time here? Oh, we did 1 hour. How about that? That's usually what it takes me to get stuff here. I know Nathan has to bop off at 2 for something else, but Nathan, thank you for joining us and helping us through this. Danny, do you have some questions in there that we think we could? I'll hang around and do some more questions, and if Nathan wants to hang around a few more minutes, he's fine. I know he's got another meeting coming up very soon.
Thank you, Mark. Danny, I'm going to hop off.
Okay, thank you, Nathan. Appreciate it.
Take care, everyone, and email me if you need your legislators' contact information. Thank you.
Thank you, Nathan. Okay, anybody,
All right,
Danny,
yeah,
do you have a
they're
question?
out there. You ready?
Oh, not really. Go ahead.
If we hired a new provider for July 2020, is that counting expenses for HHS? And can we count all salary as 80,000 from that HHS grant?
I don't know the answer to that one. Again, they didn't really give us granular details. The only guidance we've had is the HHS money is for lost revenues and for increased expenses related to COVID-19. Right now, they've been saying that it's very, we think they're going to be very, very broad in their definition of related to COVID-19, because in handing out these monies, what they've said is basically the monies had to be related to patient care for COVID-19 patients. And in their definition, they said anybody that you saw during the time of this PHE starting January 27th could have potentially been a COVID-19 patient. So you've actually treated COVID-19 patients. That's a very broad definition. They haven't told us on their expenses how they're gonna, how broadly or how narrowly they're going to define that. So the answer is the dumb look on that one. We'll find out later. Okay.
Okay, the next one is, can we give bonuses to all providers and employees because they are working hard during this time?
Be reasonable. If you have a person who's making $50,000, you're probably not going to pay them a $25,000 bonus. But reasonable bonuses for hazard pay, things like that, I think that's going to be acceptable. Again, granular level, we don't have the detail. We just have those two lines. But I would just say be reasonable, have documentation. If you're paying them more because they have to put on PPE and they're risking their lives, that is certainly a valid reason to do that. So I would think you'd be okay. Just be reasonable.
Okay. Next one that's kind of along the same lines. Can we include salary for mental health professionals for RHCs?
Salaries for what?
Mental health professionals.
Salaries for, yes, we definitely. Same answer I gave before, is we don't have a granular definition there, but that sounds like something you would definitely want to be able to include in there. I don't see an issue with including that.
Okay. The next one is, I have equipment that I bought. Can I use this money to pay it off? And then somebody else along the same lines, but they were specific for telemedicine equipment.
Keep up with all your expenses there. They haven't talked about equipment and how that would, if that would be expensed or not. You start getting into some accounting issues there. If for Medicare, the capitalization rate is whatever you determine to be, but it can't be more than 5,000. So it would depend on if you could expense that particular item or if you depreciated it over a period of time. So again, that's question is going to be hard to answer without the details. What I would say is keep up with everything. You're going to be a great accountant during this time because you don't have the answers yet on how you can do this. But that's what I would tell you, is just keep up with it, and then we'll know later on if you can use it for equipment. The telemedicine piece of it makes a lot of sense to me, because on COVID-19, that is a direct expense related to COVID-19. You would not be doing this if it wasn't for COVID-19. Okay.
The next couple are about the attestation. The first one is, what is the state start for? Oh, that's a different one. State start date for tracking. I guess for tracking the information. So that doesn't have to do with the attestation, but
what I would do is tracking the information is whenever you got those funds, I would put them in the bank account, and then I would start tracking how you spent the money at that time. So if your rural distribution you received on 5/6, put that in a separate bank account, and then start tracking how you're going to spend that money effective then. The general distribution that you received on April the 10th, that's when you're going to start keeping up with that.
Okay. The next one is, do we have to attest to receiving dollars from the $10 billion of the rural distribution?
I think there, so what is my, there's a portal there? I think there is. I'm blanking out here. Let's go back to my original slide. I'm pretty sure there's a portal there. Let's see here, attestation portal. Yes, so if you click in here, there is a portal for that distribution, the $10 billion distribution.
And that answered someone else's question on where to go for the attestation.
Yes, yeah. We again, all of these slides, these are clickable links in here. So if you clicked in there, you're going to go to that attestation portal.
Okay. If my total grants are less than 150, should we do quarterly report or any action?
If they're less than 150,000, you're gonna have to keep up with them in total. You definitely have to keep up with them. You're not gonna have to do the quarterly report, but no strings attached. There's strings attached. You need to keep up with it.
Okay. Is the PPP loan included in the 150,000 total that has to be reported quarterly to HHS?
It's a good question. The answer is no, it does not, because it doesn't have anything to do with this HHS money that's on this table here. The PPP loan comes from the SBA, so it has absolutely nothing to do with it. So great question. I probably should have had a slide that said that, but yeah, that's a great question, and the answer is no, it does not.
Okay. Another one that deals with the PPP loan. You mentioned that an executive could get 197,000, but how much is the limit for physician salary from the PPP loan?
From the PPP loan, which is completely different rules, I was quoting you the HHS rule about the 197. The PPP loan is 100 grand, no matter what. So if you're lowly Mark Lynn, or if you're Dr. Jones, that's Harvard trained. My cardiologist, he's like Harvard trained and all this. He lives in a $2 million house. He makes, I don't know, $1 gazillion a year. Dr. Warren, he's gonna be living 100 grand, just like lowly Mark Lynn is going to. So that's the PPP loan, that's a problem with the PPP loan in healthcare, because we do have a lot of people that make more than 100 grand a year.
Okay, can we use the additional funding we received for payroll after using the PPP monies?
That's my understanding. That's what I would do with it.
Okay.
Because what you're going to be using it based on lost revenues. You're going to say, before your revenues were 100,000 a month. Now they're down to 40,000 a month. You're going to need those monies to pay your payrolls until your revenue starts going back up to normal.
Okay. The next one is how about curbside services, tents, tables, etc.? I'm assuming.
Absolutely. That increased COVID, though, you did not have to buy that tent until COVID-19. So think about all the different things that you're doing now, as far as infection control, as far as tents and PPE and awnings that you're having to put up, and you're out in the rain. You're like Chick-fil-A all of a sudden. You guys are going outside to the cars, and for you guys to become Chick-fil-A, whatever those expenses are, you're going to keep up with those, and you're going to claim those as a part of your expenses.
Okay. What about signing up provider for controlled substance to minimize paper handling between patients and employees?
Yeah, same rule. It sounds like it would be something that would be an allowable expense. Like I said, keep up with everything. Like I said, the best thing you can do is set up your general ledger, set up a separate department that says COVID-19 on it, and then if you have any question, push it into that account. Keep up with your invoices, keep up with your receipts, and I don't see RHCs getting audited as much as they would for hospitals. But just in case you do have a few random audits for you guys, I mean, they're sending you guys 100 grand while they're sending the hospital 3 and 4 and 5. And I was on a webinar last week with the Senate, and one of the rural hospitals there, they got to check $40 million. So as an auditor, we audit things with big money. So you can find, so if you find something, you're going to get that much money back. I was an auditor for the Comptroller of the Treasury Office, and we always look for, is it going to be worth our time to spend 2 weeks in the middle of nowhere auditing these people as far as getting money back for the state? So, and the feds are going to do the same thing.
If we bought ultrasound machine for the office because we can't send patients to the hospital for their safety, can we count that?
Don't know about the equipment aspect of it. Obviously, that is an expense that should be included. We don't know from a granular detail if they're going to say whether if you spent $40,000 for that ultrasound machine, you can take the whole 40,000, or you can take the depreciation piece of it. We don't know the answer to that yet.
Okay. And somebody asked, how do we send back the accelerated or advanced payment? Palmetto eServices is not set up.
There was a FAQ on how to do that. I would just read that FAQ on how. I'm not sure why you want to send it back. Like I said, to me, I would deposit it and just sort of wait and see if you need to, if you can keep that money. If you've been terminated from the program, you know, Nathan and I have been trying to figure out what to do with a few of our clients that terminated. And we basically, what Nathan said was put it in the bank, hold it till sort of the storm clears, and you see if you're going to need it or not. If you don't, if you know for sure that you don't qualify, you shouldn't have received it. What you should do is probably reach out to council and make sure that's what they want you to do. Okay. And, go ahead.
And Debbie was responding. She followed the FAQ, did not work.
The FAQ did not work. Okay, well, if the people with the money didn't work, then you know, send it to Mark Lynn, M-A-R-K, 502 Shadow Parkway. They'll take care of that. I'm just kidding. Okay, go ahead.
David Cantrell says, I didn't see an attestation for the big deposit from HHS. Was there one?
There was one. Yeah, it's right here. It's if you click into this link right here where it says for tranche 3 down here, attestation portal, that's where you're going to attest. It looks very similar from what I remember seeing. It looks very similar to the first two. So I think it gets confusing because they all start with exactly sort of the same language in them.
Okay. Going back to that physician salary that you had earlier, just a few minutes ago. The PPP only does a portion of the 100K for 8 weeks, correct? So for 8 weeks, it would be about $15,000. Anything over this, up to then 197, but those are completely different things, in salary would be included in the CARES funding.
I think what she said it was right for the PPP loan. You know, your annual salary is 100 grand. So that's what, so you take 100 grand and you divide that by 12. That's going to be $8,333 a month. So basically, you're going to have $16,000 during that 2-month period of time that you can claim for your physician salaries, and then basically double that amount if you're including it for these provider relief funds. Does that make sense?
I think so. And then, which I guess that kind of answers his question, because he said, so for physician providers, after using the PPP funds to the max, can we pay from other working capital, which we've already talked about?
Yeah.
That is all I have right now.
Wow, that's good. Okay, good. Yeah, that's very good. I must have done a really good job of explaining this. No,
Hey,
I
Mark,
did not.
there are hands raised. I don't know if they're wanting to ask their questions like
Okay.
over the phone. There's about 6 hands.
Yeah, once you do that, then let's open up the hands raised, open it up and see, and let them. We'll try. This is a lot of times this ends up being sort of bad radio, but go ahead and open up some lines and we'll talk to whoever it is.
Okay, the first one is David Cantrell. David, I just unmuted your line.
Yeah, okay. I'm sorry. You answered my question.
Okay. All righty. I'll move on.
Thank you, David.
A lot of people lowered their hands, so I guess they they had answered your question. There's 2 left though. Karen, your line's open. Karen, are you there?
Sorry. Is it for the provider allocation money? Is that supposed to be over a year part? I think I got a little confused on that last question about the physician salary being for 4 months' time. You said double on the.
Okay, so the 197,200. What you're going to do is basically for the salary, you're going to take the period of time that you're dealing. So if you're dealing for 1 month, then basically you're going to take 197,000, divide that by 12. You're basically going to be able to claim $16,416 per month for that period of time. So it's an annualized salary. So if this lasts over, if COVID-19 lasts for 1 month, then it would have been 16,000. If it lasts for 1 year, it's going to be 197,000. So it's basically annualized salary. Does that make sense?
Yeah, I guess what I'm really asking is, so the 103, the lost revenue, is that going to be over a year's time that we need to make sure we reach that amount, or is it going to be whatever time they come up with for the COVID times?
We don't know. It's going to be, again, that's a question we don't have the answer for. That's why we want you to keep up with it now. It will be during what's called the period of the PHE. So the PHE started January 27th, 2020, and whenever the public health emergency, a lot of these windows are going to start closing. They haven't told us yet if it would absolutely end exactly the date the PHE is over, or it will extend out for a few more months because we're still going to be affected. So we don't know the answer to that. Let's just assume our tables are set up to go through the end of this year. I don't know. I wish I knew when this is going to end. I wish it would end tomorrow. That's what I wish. Does that answer your question? Because we don't know when it ends.
Yes, thank you.
Okay, sorry. Okay.
Okay. I've got a couple more that popped up in the chat box. And Rob also has his hand raised, but I'll read his question first. So the 103,000 and the other two payments, one last Friday and one a few weeks ago, are the numbers we used regarding the 150,000 limit attestation. The PPP loan is excluded, correct?
That's correct. That's absolutely right. Rob said it better than I could. That's absolutely right.
Okay. This deals with 150. If we have 2 RHC clinics and got 103 for each, but they're both under one tax ID, so it came in one payment, do you have to do a quarterly report for each, since it was under 150 per clinic, but not the tax ID?
We've got that question. We've asked the NARHC. They're working with HHS to find an answer to that, because that's happened several times, and we don't have the answer back yet on that one.
Okay. If we received the April 10th allocation, do I understand that we will automatically receive the April 17th allocation as well as the May 15th allocation?
Not necessarily. If you receive the April 10th allocation, you have to go in and attest to get the second one. And so if you don't attest on the second one, they're asking for that tax return so they can figure out what your 2% of net revenues is. If they don't have that, then you're not going to get that check. And then the May 6th rural distribution really doesn't have anything to do with those other two. Basically, everybody should have gotten, if you're a rural health clinic, you should have gotten at least 103,000 from that distribution.
Okay, she said she attested on the April 10th, but did not receive the April 17th.
Yeah, it should have been. Most of these checks went out on May the 15th. That's on Friday. So if you didn't get it on Friday, then we probably need to start. Well, another thing could have happened. I've seen this happen to some of our clients, is the 6.2% of Medicare revenues was actually more than 2% of your net expenses from 2018. And then you would not receive a check in that point. You're going to be able to, my understanding is you'll be able to keep that first check in total, but HHS is not going to send you another distribution. So you want to probably go in and do that little formula that I showed you and compute it and see if they actually owe you some money or if you hit the negative.
Okay. That is all the questions. We've got 4 more hands raised. If you're ready, I'll go ahead and open up their line.
All right, let's go ahead.
All right. Mallory, I unmuted your line.
Hi, I had a question about the attestations. Has anyone else gotten to step 4 and not been able to move on to the confirmation?
What is step 4? I've only.
Like it's the screen whenever you first pull it up, it would say step 1 eligibility, step 2 billing, TIN, 3 verify payments, 4 attestations. And I've called in. I just wondered if anybody else had not been able to get to the confirmation. I called in to the UHC helpline, and the people there just said, oh, well, if you got a confirmation on each one individually, then you're okay. But I'm not sure that that's really.
Yeah, usually they send you, once you get through all the steps, is you get like a paper trail that you can save and print off, and it tells you that you've done all the steps. I would probably go back in there and try again, because I had several people tell me, well, we went in, we put the tax ID number, it didn't work, we did this, it didn't work, and then they went back the next day and it was fine.
When you do that, it goes in and it says you've already attested for this one, and then it still won't let you move on. I don't know if it's because the payments were on 3 different dates and we had attested in between. I just wondered if anybody else had the same problem. I didn't really know if you'd have an answer or
I don't
not.
know. What we'll do is, if you're on here and you've got those problems, then email me and or just post it on our RHC information exchange if you have any issues like that. There's a lot smarter people than me on the RHC information exchange, so
Okay.
some of those people can help us as well.
All right, thank you.
No problem. Thank you.
I'm gonna mute her back. Megan Epperson, I'm gonna unmute you. You're unmuted.
Hey, Megan.
She may have accidentally done that. She may not have a question.
Okay, all right.
Her back. Nandita Chadha.
Okay.
It doesn't look like you have a microphone set up. So if you want to type in your question, I can read it out for you.
Yeah. Tell you what, Danny, before we move on there, I really need to run. I've got a meeting I've got to get to. So I gotta leave here too. I gotta go. But thank you everybody for hanging with us as long as you did, and we appreciate the NARHC and Nathan Baugh for coming and talking to us. Danny, thank you for keeping things running in the background. We have recorded this session, so you can get the recording of it. It's going to be on our COVID-19 website, and we will post it in the Rural Health Clinic Information Exchange as well. It'll be on YouTube, and all the slides, the updated slides, will be on there as well. Thank you for attending today. We certainly do appreciate it. Come back and visit with us tomorrow when we do a virtual mock inspection with the compliance team and with Quad A. And thank you guys for what you're doing, for being truly the superheroes and being on this front line of this war against COVID-19. So thank you all. Have a great day, and we will talk to a lot of you tomorrow. Thank you very much.